All right, we are back. I'm Tom Sosnoff. He's Tony Batista. This is Get Tasted on the Taste of Trade Network, and thank you all for supporting us. Howard, you'll be happy to know we have Howard Tillman in the house, and you're kind of a little bit of you're a local legend.
Well, I don't know about that, but
you're
okay.
bigger than a local legend. We'll make him into gigantic, but you are in the middle of this kind of explosive. I want to call it an explosive entrepreneurial machine right now.
Yeah.
And it's kind of fascinating. We've almost waited our whole lives, and now it's here.
Yeah, well, it's totally here. I mean, three sort of sea changes are: one, a huge layer of serial entrepreneurs who are doing it again and creating money to let a bunch of startups flourish. Then you've got Accelerate and 1871 and all probably 7 or 8 different accelerator/incubator venues now.
Sure.
And lastly, you got a mayor who gets it. Honest to God, I mean, he's put in a bunch of people who are all about data and technology and information, and he's clearing the path. And I couldn't be more excited. I mean, I think it's just the hottest time in Chicago now.
I think it actually started. Daley kind of had put everything on the right track. He ran into a tough economic cycle, as far as when the NASDAQ kind of crashed, in the early 2000s. But he had us directionally correct and kind of the.
He was steering the ship the right way.
I think so. Yeah, I think so. But then stepping into Ram, who's I mean, Chicago's kind of a hotbed.
Yeah, absolutely. I just got back from Shoreditch, England, which is they took a ratty area of London and they've parked 600 startup businesses in that area now. And every night is beer blasts and, unbelievable gatherings, and the networking is fierce. You come back here and we're getting that same kind of vibe. It's really exciting.
So isn't this whole thing crazy? I got to go back just since I told the story once. I got to tell it just quickly. So when we started Thinkorswim years ago, there was a tiny little bit of this, and these firms were putting up money, and they were doing it with like 2 or 3 companies. Like, I mean, that was a lot for them. Yeah. They'll put up, $20-30 million, and there'd be 2 or 3 companies, and you'd fight for like this little scraps of whatever. And it was like, I'm not kidding, 2 or 3 companies. Now you're talking about like 600.
Yeah. Well, and also, you guys had Eric on recently. I mean, Lightbank has set aside $200 million. Google just spent $100 million.
Sure.
And they figured out that if nobody knows you spent $100 million, you're sort of screwed. So now they've committed another $200 million to promoting these original channels that they're doing. But it's it couldn't be better. And the other thing is, the people who are really screwed are the traditional venture firms.
Sure.
Because if you got to put $5 or $10 million to work, there's nobody interested. And so the layer is 500,000 to maybe 2 million. That's where all this stuff is happening now, because the barriers to entry, all the stuff that kept people from like Big Iron, gone. You rent the stuff at Amazon. Big people, you figure out how to have people do the work for you. All these different trends are making it really tough. What's going to sort of have a resurrection is corporate venture, because corporate venture is the right-sized investment. They're happy to do $250,000 or $500,000, and the difference is they don't anymore require that they own the store. They don't have all these lockups, and they're the first customer. Well, and they're the first big customer. So I mean, if they seed you and you got a built-in customer and they like your idea, and it's off balance sheet, so they don't have to explain, wins and losses, I think it's going to be a really hot time for corporate venture.
It's so crazy because just like what Howard's saying, just to break it down, you would end up in the past. I mean, how could a company like Lightbank, 47 companies in the last year, something like that? Like, these are ridiculous numbers. But if you think about traditional private equity, so you go out and you raise $2-3 billion, whatever it is, and how many different firms can you actually participate with? Yeah. So you're thinking, okay, if I raise $2 billion, the most I'm going to do is maybe 20 deals, right? So when you're talking about these numbers of like $50 million, you're basically at $50 million a deal now.
Exactly,
and you don't need $50 million to start, what XYZ company.
And they're not equipped to even support them. They don't want to have a firm of 200 to 300 people.
And so they're all late stage. So private equities now has become a late stage.
Exactly,
it's replaced IPOs.
Yeah.
So now
they're doing roll-ups. That's basically what they're doing.
So the IPO market now is dead.
Yeah.
There's no. I think Vanetta did the other day.
We had none in June.
There's 0 IPOs in June.
Yeah.
But look at all these companies starting. So now you've got this. At some point, crap's going to hit the fan.
Well, I'll tell you what. I'll tell you why
ahead.
why that IPOs aren't as important. My latest sort of pithy phrase has been build to be bought, because you've got Facebook out there with these amazing tools. Facebook Connect surveils 9 million businesses every single day. So when Instagram starts to pop, or when some of these companies that they're picking off right and left, these are great exits. These are exits, a year into something, and the Instagram guys are just one example. If you don't run up a huge front end cost, you can make really great returns. And so I think you're going to see a lot of these companies, these young startup companies, the outlet is to be acquired by the big guys.
We were talking about this the other day, and because we were acquired in the past, and I remember all the discussion with big firms in classic way was this deal has to be this deal has to add to the bottom line. This deal
accretive, yeah,
it has to be accretive. That's what the deal has to be accretive, and if we do it, and now. The fact there's no such thing as a accretive deal. That every single deal is just sticking money into another company, and you're kind of so we have this theory about trading, which is you make lots of small trades with a high probability of success, and then in the end, your portfolio looks like it's almost the casino mentality. Just you keep playing, you'll win. That's the light bank mentality. I think it's the way you think and everybody else, which is amazing.
Yeah, it's great, and it's exactly what I mean. Plus, you have to understand that we are now looking at 3 or 4 changes in the whole world that are going to make it just a different world. I mean, one to give you an example, Facebook was the first company. Facebook really changed the web, not because it has 901 million players, okay? Facebook changed the web because it was the first place that required you to actually be you. And so once it became clear that your internet identity was going to be a real identity, not a dog or a cat or whatever, that permitted the assembly of so much personal information, and the storm doors have just opened. So now we know everything about everybody, and it's going to change politics, because you're going to see this mass customization where they're going to send you a video that tells you exactly what you want to hear, right? And nothing else. And it can be as snide or nasty as possible because you're not running it on TV. So nobody says, well, gee, he said he wasn't going to be a dirty campaigner, and look at this thing. Instead, it's like you tell every single person in the world what they want to hear. So that amount of personal information is going to change marketing, politics, everything. And then the other part of that is all of a sudden we can keep score. So I call this know before you go. The point is every marketing dollar now should be accountable. And so you should be able to track and measure exactly whether your spend is effective or not. And you remember John Wanamaker was the guy who said, half of what I spend on advertising is wasted. I just don't know which half. So today, not going to happen anymore. And last, maybe third, is we're connected. Everybody is tethered with these smartphones and these devices. So you can reach me. And what I would tell you is these days, the context in which you reach me is more important than the content. You can tell me a lot of stuff that I'm not interested in because it's the wrong time. That's waste.
And I still think that whole point, we're still infancy stages there. I mean, literally infancy stages.
And so I'll tell you the last thing, and this is a favor I'll do for you because I want you to be successful too. All right.
Thank you.
So number 4,
they threw us a bone.
Number 4 on my list of world-changing things is what I call new behavior drivers. Okay. We used to think a business had to save me time or money or make me more productive. Here's a flash. Status matters. Now, we always knew status mattered to everybody. What we didn't know is you can now measure it, you can confer it, and you can track it. So what I would tell you is you ought to have a big winners leaderboard on your sites. People care. And it drives participation, and it drives everything else. I mean, you go there. You don't want to be.
He just trumped us.
You don't want to be number 99 on the list of your friends, man.
You didn't ruin it, but I've been working on something that is going to change personal investing, that is going to change the self-directed investor, the mentality of the self-directed investor forever. And I'm launching it next week.
We were supposed to launch it on Monday. We got pushed back by the Greek crisis.
Okay. All right.
So I'm launching this next week. It's going to change the world, as you know, as a self-directed investor.
Right.
It's small. We have our own little world.
Right.
Like you guys, you live in this big world where there's like lots of people and lots of things. We live in this tiny little
parties
world.
and
like you have parties.
But the size of your world makes it even more important that people care about where they sit and where they rank in that
So
world.
we have a game changer, and it's you called it new behavior drivers.
Right.
We're right there. I didn't have that cool a name for it.
Right.
So I have my own
Okay.
little name.
Don't tell me yet. Just tell me
don't
when
worry.
you release it.
So you are the keynote speaker today.
Yeah.
At Tech Week. I think Rahm Emanuel, who's the mayor of Chicago, is speaking this morning.
Right.
And you're on the Council of Technology Advisors for
Yeah.
Rahm, right?
Yeah.
And you're speaking this afternoon.
Yeah. 2:00.
Okay. So unfortunately, we have a show at 2:00. Otherwise, we could cancel the show, Tony.
Right. That's okay. It'll be
I don't have a
taped.
problem.
Don't worry
Okay.
about it. We have a media business, as you know.
Okay, so I'll do this. I will watch the tape of yours if you watch the tape of mine.
For sure.
Okay.
For sure.
So let's talk about. You wrote down for me, which is great because I have my own questions, but I like your questions better.
Okay.
You wrote down for me what are some of the keywords that you're going to be discussing and stuff. So let's talk about it just a little bit.
Well, so hyper-personalization, this idea that we have so much information now about every single person that we never had before. So you don't have to do things like marketers used to do. You don't buy a publication because of what they tell you about the readers. You go right to the readers. You know, there are no middlemen in these kinds
How do
of
you get
transactions.
your brand out there?
Well, I think you get your brand out there because we have the ability now to publish across these huge distribution things. One of the things that I don't know, somebody said is that it's important to fish where the fish are, right? Mm-hmm. So if you look at the aggregators now, whether they're the game companies, the video companies, the media companies, who knew that you were going to be able to address a market of 100 or 200 million people with basically a flip of a switch, okay? So when a game launches on Zynga and 35 days later it has 100 million people that are playing it, we can't even get our head around these numbers. But those distribution channels and those branding channels exist today. They never existed before.
But can the Zyngas of the world, and based on their stock price, the answer is going to be no so far. Can the Zyngas of the world, and I have to base everything off a fair market valuation or interpretation of what they're. So 100 million people try a new game, but the stock is worth 50% of what it was worth before.
Right.
Because the next question becomes, okay, this is cool, but how are you going to monetize this?
Well, you monetize it by combining the fact that you can now reach them with the fact that you know who they are. So you don't waste your time on. Well, let me give you an interesting statistic. Right now, 42% of the gamers on the web are women who are stay-at-home moms, 30 to 60 years old. Okay, everybody thinks it's 8-year-old boys. It's not. Farmville, the most affluent player, makes about 3 times more than an actual farmer makes in terms of Farmville. So you know this. You have to figure out how to message and reach these people, and you also have to know how to not be interruptive. I mean, one of the big risks to Facebook is mobile. It's really hard in the mobile world to figure out how advertising is going to be important.
Sure.
But Google would tell you that something like 70% of the people who do a search then show up at the place, the destination. So Google knows that search is in fact directly connected in a very impressive way to the ability to drive a customer to make a purchase.
So let me put this into, because one of the things we like to do on this show is to make everything we talk about kind of so it's actionable. So it's not just listening to two guys talk. It's actionable. It's investable. That kind of thing. Are the Zyngas of the world interesting to you as an investment because they've just annihilated social media? I mean, I don't have Zynga. What's Zynga trading for, Tony? But for example, Groupon's trading for $10.50.
Right.
50% of its IPO price.
586.
Zynga's trading for 586. I think its high was 15, but came out at like 10. Facebook has, we just mentioned that it has rallied back a little bit. It's trading for almost $33, but it opened at 38, went down to 26. It's trading right in the middle of that range.
It actually hit 42 or something, I think.
On the opening,
on
it
the
was
opening,
all the systems were messed up that morning.
To say the least.
What are you a buyer here?
I'm not a buyer of Facebook right at this point because I'm not sure that they're not going to take a couple more hits. But and I thought the opening price was crazy. But Zynga at $5 or $6, I'd buy all day long because because this the gamification of the web is just beginning, and everybody is going to be driven by these accomplishments and achievements and sort of these measurement tools. And I think that Mark has been very, very smart. I mean, they. If anything, the dinosaurs, Activision, Electronic Arts, these kinds of guys who are just doomed, they haven't figured out that the model is not to try and find one price point, $59.99.
I completely agree with you.
Right? Everything
100%.
is going to be fluid pricing. So here's what the game world has told us about every kind of business, which is every single day a gamer makes 3 decisions. How much do I want to invest? How much time do I want to commit? And how deeply engaged in this? That's how all commerce is going to be. There's not going to be any fixed pricing.
I completely agree with you. And the old companies are going to be just that, old companies, and they're never going to catch up.
Right.
But how does the individual investor, the Tony Batistas, the Tom Sosnoffs of the world that can't necessarily participate on a venture level, but that want to participate in this space, and we're limited to Zynga.
Sure.
We have 6 choices.
Sure.
So, you said 600 companies in London, 500 companies in Chicago. This firm owns 50 companies on their own. How are we going to participate if we can't get them to come to the quote listed marketplace?
Well, I think they will come, but I have to tell you that the big thing now is Kickstarter and everything that is growing out of Kickstarter. So these are crowd-sourced, funding.
Do you love Kickstarter?
Well, I love Kickstarter when it hit. The most recent win was something called the Pebble Watch.
I don't know what that
Their
is.
goal was $300,000. They raised $10 million from 67,000 people. Now, the Jobs Act, pretty soon we're getting to the point where any business will be able to raise $2 million or $1 million on the web. And so that's how consumers are going to get at this. You're going to have a whole new social mechanism where people are going to be able to bet on ideas as early a stage, even before the venture guys.
I think that's great. I think that's a great thing. I think that's an unbelievable thing, and I think that will change. We've already seen the change in innovation because we every day we've been doing this bootstrapping series, but the last couple of days we've had on like a professor from professor of entrepreneurship at Babson. We've had on a bunch of interesting people that are kind of leading the charge from an educational side. Let's talk a little bit about your institution.
Sure.
Are you focusing now on? Has any of the curriculum changed towards entrepreneurism?
Well, 3 things. One, we call it U Inc., okay, because we're telling these kids that they're going to have 10 or 20 jobs, that they're going to be working for many, many companies. They got to be looking out for themselves. So the core of everything is entrepreneurial independence. You have to be prepared to have your course and your ideas. In terms of the skill sets, what's going on, we started in digital media. So the whole world is migrating from analog to digital, and that's what our kids are exactly great at. And so we've grown from 100 students when we started to 600 now. We work with something like 500 different employers, and they can't get enough of these kids. I mean, every single company in America has now an interactive, a crowdsourcing, a social media department, and they're just playing catch up. So the biggest change, though, I think, has been we've already largely abandoned the platforms and the consoles. Everything we're doing now is phone-based, tablet-based, mobile. Yeah. So the key word is slow-mo, which is social, local, mobile. And,
social, local,
and I call it motional, which is just mobile and social.
You guys have all these terms.
Well, but let me tell you about one more concept that's really important. Sure. It's called nudge commerce. Okay? Nudge, right?
Okay, let's hear it.
And nudge is you're walking down any area, and because we know where you're at and we can reach you through your phone, suggestive selling is going to relaunch in a really important way. And you're going to hit consumers at the right time when they're in the right venue with offers that are going to be irresistible. And it's going to move them to, I always love that at Home Depot, they finally figured out, I suggested this to them 10 years ago, that when somebody comes in and is trying to repair a toilet, you always make 3 trips because you forgot the washer, you forgot this and that. So how about printing out a list, when that first item is there? Like, did you get? So you don't drive home and then feel like a moron and then come back. That's another version of this suggestive selling, nudge commerce.
The smell to come
smell
out of your
test.
phone, so that like I'm walking by a burrito joint and all I can smell is like a steak burrito, or Dunkin', I'm walking by a donut shop and I'm like, wow, that my phone's.
Well, one of the things
my phone's shoving odors at me and like, come, Tom, come get me.
One of the things you mentioned before
You're
about
nudging me, right?
nudging you exactly is Groupon has figured this out too. I mean, it doesn't make sense for a pizzeria necessarily to give away their main product at 8 o'clock at night, right? When they got theoretically a bunch of people who are buying it. But at 2:30 or 3 o'clock in the afternoon to broadcast a 2-for-1 offer for a pre-cooked pizza, that's huge. That takes up capacity.
Groupon
and
did that
else.
with like their penny offer.
That's Groupon now. Yeah,
right. But I don't know if that was successful or not. But but I do know. So anyway, we've been speaking with Howard Tillman. You are one, I could sit here for
One interesting
12 freaking
SOB.
hours with you. I mean, this show should be Tom, Tony, and Howard. I mean, we can do this every single day for about 12 hours a day. We just skip the market stuff because it's so damn fascinating. And I think this is also, in fairness, this is what financial media should be. Financial media doesn't need to be, okay, the S&Ps are up 25 cents higher than they were 15 minutes ago.
Right.
Okay. Financial media should be inspiring the listener to start thinking independently and entrepreneurially and to get them all excited about, this is what capital commitment is as well. And
Right.
blah, blah,
These
blah.
these are the
Strategies.
trends that are driving this stuff. Indiegogo, which is one of these crowdsourcing sites, 100,000 projects they've done. And they're smart enough now that they can tell you what the perks should be, how to design your pitch, and they can tell you halfway through whether you're going to make the money or not that you're looking for.
Unbelievable. Well, financial media is so far behind, you have no idea. We're living pre-dark ages.
We don't have any cool acronyms for anything we do.
Yeah, it's all horrible.
We haven't evolved yet.
Anyway, this is Howard Tolman with Tom and Tony. It's great stuff. Good luck today at your keynote speech, and hopefully I'll see you over the weekend.
Great. Thanks for having me here.
Awesome stuff. We're going to take a 2-minute break. Come on back with Good Trade, Bad Trade. Actually, Linda, give us 3 minutes because we're going to do the Good Trade, Bad Trade. Thanks.